So the Biden administration announced this week that they're blocking Nippon Steel's acquisition of U.S. Steel. Let's see what they're saying.
We were expecting from the Biden administration is out now. Megan Casella joins us with more on that. Megan, good morning.
Becky, good morning. We've just learned from the White House that President Biden is officially blocking the proposed merger between Nippon Steel and U.S. Steel, that $14 billion takeover that we've been talking about for more than a year now. Biden says he is blocking this on national security grounds. A long news statement out from the president on this. I'll read you just a part of it. He says he's taking action to block this deal because it is his solemn responsibility as president to ensure that now and long into the future, America has a strong and domestically.
It's funny that she's reading from a cell phone instead of the teleprompter.
Owned and operated steel industry that can continue to power our national sources of strength at home and abroad. This comes after that Committee on Foreign Investment in the U.S. came out with their recommendation to the president last week, which wasn't much of a recommendation at all. It showed that they were split on this. We know that within the administration, some officials wanted this to go through, some did not. That opposition had been led by the Office of the U.S. Trade Representative, saying that this was not going to be good for labor. The U.S. Steelworkers Union was strongly against this. This became very politicized. What happens next, we don't exactly know yet. We know that Nippon has said they will pursue all options available to them in trying to find a way to make sure that this deal moves forward. But there isn't really an appeals process to the CFIUS national security review process. There might be something that they could appeal in terms of procedural grounds, but we would have to see what that looks like. Of course, this will also likely continue at least a little bit into the Trump administration, but we know the president-elect has also been against this deal. So while both companies we do expect will continue trying to push this forward and finding a way through, at this point, we don't expect that President-elect Trump would change his mind. And now we know that President Biden is.
So, for some background here, the $15 billion takeover of U.S. Steel by Japanese Nippon Steel was blocked, and like she said, Biden and Trump are both against it. Part of it has to do with union workers, so that there are fears that they would risk union jobs if this takeover happens. And I think another one, what they're referring to as this national security issue is that a company like U.S. Steel, with its long-standing history and also just its core infrastructure role, so manufacturing steel, having this in the hands of a foreign country, even though it's an ally, some people see as a problem. And it exposes us to a lot of the problems that, for the last 25, 30 years since NAFTA and free trade agreements, of outsourcing critically vital industries to companies and countries that don't necessarily have an interest in just U.S. dominance, prosperity, that those things are inherently bad. So you think of in NAFTA, you start these free trade agreements that ultimately end up shipping a lot of jobs overseas. And it is basically bad for the workers because they lose their jobs. We get cheaper prices most of the time as the consumer. But then on the other side, in the countries where these jobs go to, their manufacturers can't compete with ours. So, if you're Ford and you move a plant from Michigan to Mexico, then car manufacturers in Mexico or whatever they manufacture aren't going to be able to compete with Ford for talent and on price. And then we get the cheap labor, we benefit from the cheap labor, but all of our jobs go away. That's kind of in a nutshell how a lot of free trade agreements end up affecting the economy. And so when you think about foreign policy and how our companies are now, they're not just American companies, right? They're multinational, they're globalized companies. It's what they accuse a lot of politicians being, these globalists who are selling out Americans in favor of business. There's a lot of that kind of rhetoric wrapped into this because, the Japanese government is saying that U.S. Steel, Nippon and U.S. Steel, they released a joint statement saying that this is a clear violation of due process and the law. It is shocking and deeply troubling that the U.S. government would reject a pro-competitive transaction that advances U.S. interests and treat an ally like Japan in this way. Unfortunately, it sends a chilling message to any company based in a U.S. allied country contemplating significant investment in the U.S. And then tons of steel. So here's this graphic. China is produced from January to November of last year. Zoom in. 929 million tons of steel produced in China, followed secondly by India, and then U.S. and Japan. If you combine those, we would just be above India. So China obviously dominating the steel market. And then this article goes on to talk about unions, but Trump has also expressed wanting to block this as well. And I think it raises some interesting questions around how much the U.S. is basically willing to let foreign companies take over U.S. businesses that have pretty serious infrastructure implications. And I think, you see this with TikTok, Temu, Shein, these Chinese companies that are dominating the U.S. market. And, for what many decades was the conventional wisdom that the U.S. will export capitalism to China and will bring democracy to China by letting our companies do business there and doing business with them as a manufacturer and the United States as a consumer has actually backfired. We have actually ended up importing a lot of Chinese authoritarianism in the form of cultural censorship. For example, Disney, the NBA, Tesla, any of these companies that have big businesses in China, they censor themselves to be compliant with the CCP because that's what you have to do business in China. And here we're talking about Japan and the US, so it's different. But the question of, who controls the companies that are doing business in the US is an important one when you think about what are their incentives. Like in TikTok, for example, what incentives do they have on the content moderation side, on the promotion side, to promote what's in US algorithm versus China or other places? It's commonly known that in China, the TikTok algorithm for children is very different. It's very educational, it's time limited. They have screen time limits that are imposed by the government for children. We don't have any of that. And it, I think, touches on how our individualism and our freedom is kind of weaponized against us in favor of, say, well, we're a free market. This is where businesses want to come do and flourish, and they do because we have a very strong consumer base. But when the companies are no longer rooted in the U.S. and they're really seen more, they see us more as a chance to exploit our consumer base, and we don't have any of the same kind of protections for our workers, for our consumers, then I think it starts to raise some concerning questions. And so going back to Nippon Steel and U.S. Steel, what, as far as Japan goes, you would think that because they're such a close ally, maybe it's not a problem, but maybe it's a question of there's no ally that should own U.S. Steel, and it should be nationalized before it's sold off to a foreign company. And foreign investment, and once you cross kind of like Wall Street and protections for businesses and corporations with companies that want to do business here, I think you find that unless politicians are willing to stand up and say, no, we're going to block this, or we're going to implement protections for consumers, and that means opposing these kinds of mergers. It means opposing sometimes our own vocal investors. For example, Jeff Yass, he is a big investor in TikTok. He's an American, and he donated heavily to Trump's campaign. And so, that certainly has something to do with why Trump has changed his tune on TikTok. But this guy Jeff Yass, he's worth $27 billion, and he $50 billion as of September 2024. He's a big investor in TikTok, long time trader and financial trader, and so he has a $21 billion stake in TikTok. So obviously he has a lot to gain from it being sold, or otherwise being regulated by the U.S. because it's a Chinese company. But there's an interesting kind of overlap between when a multinational company who solicits American investment, they can use Americans to kind of launder this message of like, hey, this is anti-capitalist, this is anti-free market, we should be able to do what we want because we create jobs here. But at the same time, using that to exploit the U.S. market. And I don't know enough about the steel market to say, for sure this is good or bad, but I think this is a sign of a shifting sentiment that all investment in the U.S. is going to be treated the same way. And, it'll be interesting to see how this applies to like Middle Eastern investment. The Emiratis just sponsored the NBA Cup. For example, if you're an NBA fan, you're watching the NBA mid-season tournament that just ended a couple weeks ago. That's now in its second year, sponsored by the Emirates, United Arab Emirates. You look at what happened with Live Golf. So Saudi Arabia basically their public investment fund did a hostile takeover of golf by weaponizing our like anti-monopoly rules and almost taking this kind of pro-worker approach where they were able to lure in a lot of golf's PGA's top talent by paying them a ton of money that they wouldn't have otherwise made in the PGA, and then they turned it kind of into a worker issue where the PGA is a monopoly, it's anti-competitive, it's not letting new leagues compete. It's anti, I think they tried to exclude players from certain tournaments like the Masters. And that's a foreign government interfering in domestic issues with this like pro-worker investment angle. Now that you see the NFL has also recently approved minority ownership from private equity firms, I expect that there will be more foreign investment in things like the NFL and specifically more Saudi investment. There is some Middle Eastern. I think that's the United Arab Emirates that has an ownership stake in the Washington Wizards. They're part of an investment group that owns the Wizards, the Caps, and I think they're one of the first investors in American sports. But there's something to say that Saudi Arabia couldn't start their own rival to the NBA, right? Or maybe invested in Europe and start luring some American talent there with big contracts. So back to this U.S. Nippon Steel. For now, it looks like it's going to be blocked. There are going to be some lawsuits. I don't see why Trump would reverse course on this, but something to keep an eye on with this trend of friendshoring and what the limits of friendshoring are. And to define it, it's striking deals with countries perceived as long-term reliable allies. If you look at, like tariffs and especially China, it's not as clear-cut as sometimes it sounds. Like we're going to put a blanket 10% tariff or 25% tariff on Chinese or Mexican goods, because there are also ways around it. Like the last couple of years, China has invested heavily in manufacturing in Mexico so that products that are designed in China and are owned by Chinese companies They basically ship the goods to Mexico, assemble them there, and then they call them made in Mexico to avoid tariffs, to avoid, different perceptions around made in China. Happens in Vietnam too. So with this topic of tariffs, foreign policy, investments in the U.S., I'm curious to see what continuation there will be from the Trump side, especially given that Biden also continued some of Trump's tariffs when he entered office. So it's not as polarized as sometimes the rhetoric makes it sound. There are common grounds and I think a consistent voice around protecting the U.S., especially after the pandemic, protecting the U.S. against our own markets being weaponized against us. Anyway, that's it for U.S. Nippon Steel. I'll post any updates as this develops. See you later.